Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Easter Monday. Hope you had a great weekend.
Yes, I did. Hope you did as well.
I did, as a matter of fact. And I want to get right to it. And I want to talk a little bit more about the condominium market. So how are you seeing the condominium market right now?
It's taking a lot longer to sell condos in general, just because there's a whole stigma around the condo ownership type, mostly because of the towers in, what was that called?
Surfside
Surfside
collapse in Miami. Yep.
Yeah. And all the legislation that came down after that, which ultimately I think is good legislation. It's a hard pill to swallow. I think if you wanted to make an analogy, it's a bad analogy, but I think that market's going through chemotherapy right now.
Well,
Hopefully
I think
on the other side.
I think not only is it going through chemotherapy, but it's going to get ready to have some radiation too, because there's a lot more coming down the pike that I don't think a lot of people know.
Yeah, so let's talk about that. The first thing is, I can tell you that as a numbers rule, right? The general market right now is 5 to 7 months, depending on where in Florida you look, 5 to 7 months of inventory on the books, right? That's
5 to 7 months.
5 to 7 months, right? Which is a balanced market.
Okay. So how long on the market is your average condo taking? Because you had one on the weekend, you sold it in 2 days.
The condo market is not 5. That's the general market. The condo market is 9 to 11 months. Okay. So much, almost double, right? What the average market is. So single families are less, condos are way more, right? And I'm seeing them sit on the market for a long time. Now, I did have one that I sold, or I went under contract with last week. We listed it on Friday, went under contract on Tuesday. That's pretty quick.
Let's talk about why that sold so quickly then. First of all, it was priced right because you're an expert real estate agent, but let's get beyond that. Okay. Let's find out why. So, was this condominium FHA approved?
Don't know. Don't think so. Didn't list it as it was.
Okay. So the first thing that we would want to do is let's check and find out, is it FHA? Is it VA? Is it conventional? Now, conventional in the eyes of our market, meaning the lending market, means that Fannie Mae or Freddie Mac have approved the condominium, meets their requirements. But in the real estate market, anything that you can get other than FHA or VA, they'll call it conventional.
Yes and no. Yes, a lot
I
of
will
it.
tell you because I see it. A lot of conventional financing.
Make that mistake. I'm not saying that. I'm saying yes and no. We do have a box that says other. It's just that most agents don't know what the heck that means.
They don't know what it means. They think that anything that you can get that isn't FHA or VA is called conventional. It's not the case. So we have our own condo department and we run these through quickly. You get me an address over, name of a condominium, we'll get it over and we'll tell you whether it's approved or not approved pretty darn quick. And if we have done a loan in there, it's fast tracked through it. If it's approved, but we haven't, we still want the condo docs just to make sure everything's up to speed. So even if it comes out on the Fannie Mae approval list, the condominium may not have to complete a complete questionnaire, which I want to get into next week on how that whole questionnaire is getting ready to change.
Yeah.
We're going to get into that because it's getting ready to get a lot worse starting on the 3rd.
And I struggle with this, man, because although I'm not a huge fan of the condo concept, right? It is more affordable than many other types.
Well, it's a lot of people's lifestyle too. If you're retired and you got a nice pool and a clubhouse and a gym and you can do it all right there and you don't have to mow your yard, the yard's done for you. It can be a well-needed lifestyle. Or for young people that they're not going to get out at 25-year-old and mow the yard every weekend when they're going out partying with their friends. It's another lifestyle for them too.
100%. Yeah, that's what I did for my daughter. I got her a condo.
But what's happening is the guidelines are getting ready to change and the forms are going to change.
And they're going to make it harder So there's already not enough condos on the approved list, and they're going to make it harder to get one done. I don't understand why the government wants to get in its own way.
Fannie Mae is pushing because they don't think that there is enough reserves, first of all, within these complexes. And they're going to eliminate what's called a limited review.
Okay.
So a limited review means that, you know what? It's not coming up on the Fannie Mae list, but if you look the other way and I put a little bit more money down, you can answer 10 questions on the condo list instead of 110 questions.
All right.
So by putting more money down allows people to get through some of the hurdles that the condominium may not check. Fannie Mae's now going, hey, wait, we've made this too easy. And now we're going to run into problems because we don't think these condominiums have the reserve requirements to be able to cover a loss if there was a loss. Right. So the reserve requirements up until now is 10%. So they have to have 10% in a reserve from all of their deposits from their HOA fees to cover. And 10%, that's not a lot for a business to have, but it's significant. If you're running $1 million a month through your community, then that's $100,000 extra dollars you got to have. Now they're going to make it 15%. So that's a 50% increase for them.
So let's talk about that real quick, because that's Fannie Mae, that's nationwide.
That's correct. This is not just Florida.
Not just Florida. In Florida, we already have a couple of things that because of the Surfside collapse that were put in place that specifically are forcing these associations to have more reserves.
Yep.
So is it possible that accidentally the Florida legislation may have helped us get over that issue, and we're not going to have these reserve issues?
I don't see that because I see, just like you said, they're already struggling to become approved. We've seen them falling off the trees like leaves in the fall. So they're just like what was approved. And if you go to the approval list, it'll say expired and it tell you when it expired.
Right? But I've found, and maybe you can disagree with me if you want to, but I've found talking to these associations and the association managers, it's not that they can't get approved. They just don't feel like it.
No, they're ignorant to it too. Because if you got Karen that's on the board, that's just a retired school teacher that happens to volunteer her precious time to being on this board, she already owns it and she's not going to move. She's not looking at the saleability, the marketability of the owners of that. Now, when you're in home ownership, you should always be looking for that as an investment. Otherwise, rent. And a house is investment. So if you're not protecting that investment, and when you get knocked off of an approval list for financing, then your financing becomes harder to get. So what happens is FHA and VA are the easiest because you can do 100% financing on a condo if it's VA approved. You can do 3.5% down FHA. But FHA eliminates you first. Like you can't even have, if you have a board of directors where you have to get approved to live there, you're automatically rejected.
And that's because they view it as
discriminating. Now,
I
I never thought that was discriminating because I want to know if there's a pedophile wants to buy the house next door to me. I'm fine with knowing that stuff.
That's so the word discriminating means to be selective. It's a matter of what kind of discrimination, and that's where they.
I get it. I'm not going to win that fight.
No.
However, now Fannie Mae was much more relaxed on those things. They really didn't care. They didn't even care how many owners to renters there were if you were buying one as a primary. They only cared if it was a saturation with too many investors, if you were trying to get another investor loan. And that's why the limited reviews came into effect, and they were easier for people to do. Now that those are going to be phased out completely, it's going to make it a little bit more challenging. So what has to happen now is you've got to get non-conforming or non-QM type loans, meaning these are available by investors in the secondary market. They don't meet Fannie Mae guidelines. So these investors can say, hey, we'll make a determination as to whether we want to get into this condominium complex, but we're going to make up our own rules and we're going to make them a little easier for you, except for one thing. Actually, two things. You know what those two things are?
More money down, better credit score.
Make it three then. A little better score. You're not as concerned about the score, but a little better score.
DTI?
More money down, and higher interest rates.
Oh, higher interest rate. Sure.
So now you got to go primary residence. Your minimum is going to be like 20% for most of these. Some companies will advertise 10%, but they just never go through. So now you're looking at 20% on primary, 30% on investment. So you've got to go through these, and there's still hurdles. I got one right now. The only reason it failed Fannie Mae is because two owners own more than 10% of the units.
Right.
And that's an elimination right off the bat.
Yeah.
It was even an elimination for non-QM, but non-QM is more flexible and they want your money.
So they'll just charge a little bit higher interest rate.
Exactly. So they go, oh, you mean it doesn't pass because you have two owners that own 20% of the units? I'll tell you what, pay me an extra quarter of a point and I'll do it. And that's how the non-QM work. Now they're weighing risk. It's a business. They're weighing the level of risk. Hey, you can't get Fannie Mae. You can't get Freddie Mac. You can't get HUD. You can't get VA. I'll do it, but I'm going to do it under my terms.
Yeah, do it for a little bit more. Yeah, absolutely.
So I want to next week get into a little bit more of the details on what non-QM means, what non-warrantable condos mean, what is eliminating these. And I would like to reach out to all the board of directors on every condominium and say, if you don't get your act together, you are going to reduce the value of your condominium for all of your owners. And if you do get it together, you're going to increase it because you will be one of the only ones that do it.
You remember we did that for my daughters.
We did.
They had just gotten pulled off the list like a month or two before we needed to finance it. And we got it put back on the list. And I remember having that specific conversation with Betty over there at the HOA or the COA. Yep. And she was like, it doesn't matter. Everybody pays cash. And I'm like, honey.
That's why they're having to pay cash.
Exactly. So
your value will go way up if you can allow people that don't have cash to buy there. And who buys cash? Old people and investors. Young first-time home buyers can't pay cash for a unit unless you got a rich dad like you. You know.
It's not
so I want to talk a little bit more about that next week. Let's do a little deeper dive into it. In the meantime, I want to give everybody an update. Last week was an improvement in interest rates. It got a little rocky a couple times there, but overall, we've come back a little bit. We're still about 90 basis points off the pace from February 27th when everything started to fall apart. I think once we get this oil and the Strait of Hormuz back opened up, you're going to see oil prices drop, gas prices drop, and you're going to see interest rates drop. That's my prediction. Are we going to get back to 5.99? I don't know that. But if I can hover in the low sixes, I'm just fine with that right now.
All right. Honestly, it doesn't seem to be impacting my buyers that I'm working with currently, but it could be keeping people from approaching me.
I don't think it's impacting my buyers as much as it's impacting refinances, because it will keep people that have a 7 aren't going to refi to a 6.5. They don't even want to refi to a 6. They want a 5.5 from 7.
Of course. That's right.
So that's where it's impacting it, because if you don't have enough of that spread, they're like, I'm not doing this for $50.
Yeah, no, I wouldn't do it for $50 either.
No, most people won't, and they don't. And therefore, that's why a lot of the refis have backed off a little bit. So what are my predictions? I think that we're going to get back to the low 6s again, probably hover in that territory. That's the news from the Lone Ranger, and there you have it.
There you go.
All right. All right. You have a great day. I hope that was helpful for you and everybody listening.
Let's definitely go through the requirements next week.
We're going to do it. Pay attention. We'll be on for non-warrantable condos. All realtors should be listening to this. See you then.
See ya.